Coleman, and we're talking Main Street and the small business lenders who help it grow. Joining us today, John Winick, Lance Sexton. Lance is going to do a special review of Bank of Dave. We've been teasing that. John's going to talk about his webinar. Let's start with you, John. Distressed real estate in a Miami conference. What's going on down in Miami?
Well, I happen to be at one of the 3 annual distressed debt conferences that this group called IMN has. So actually, a lot of SBA lenders here. There's actually a panel on SBA liquidations tomorrow. So a little of an SBA tie, but just a total coincidence. I'm here for that right now.
What is the mood of the attendees?
I wouldn't say somber. I mean, I think people, to some extent, people here are deal makers. So bad news to some extent is good news. Yeah. We kicked it off with a great presentation on insurance and what's going on in the insurance industry. And basically what's happening is the reinsurance market is led by very, very highly leveraged institutions with no financials reporting and so on. And they are reeling right now. And you're starting to see if State Farm has to pay more to reinsurance claims, they have to, in turn, increase the premiums on their deals. And you look at the claims from 20 to 22 in Texas, in California, in Minnesota of all places, in Florida, and the insurance claims have been like in the tens of billions. And it's going to have a real impact on Main Street because that means that more companies are pulling out of writing insurance policies in places like California, Florida, and so on. So that was kind of the initial hot topic, which is the insurance industry.
Okay, so how much? Go ahead, Lance.
Oh, I was just going to say, John, I've got a project in Florida that we're working on, and Florida is also a state where it's very difficult to insure business property. And, they had an insurer who became insolvent and lost coverage, and now finding coverage is very difficult.
Yeah, John, how much are insurance premiums going to increase, do you believe, over the next 12 months?
The last couple years have been 20 to 30%.
Wow.
So it's you are getting situations in which a borrower cannot pay the property taxes, the loan payment, and the insurance premiums. Something's going to give because there's just not enough cash flow on the property, or the business doesn't make enough money. And I think there's going to be some very difficult decisions in which lenders are going to have to ask themselves, do we want that borrower to default now, or do we accept lower coverage? And I think that's something that people are going to have to discuss. But, in places like Florida, California, Texas is a total disaster for insurance. The costs are going up at very high levels. And that affects really everything from commercial real estate to business insurance. Though business insurance isn't quite as bad, but anything on the property side, costs have been going up through the roof.
Well, and you don't have to look far, guys. Look at your annual renewal on your homeowner's insurance.
Sure.
Even here, there's not been a tornado or some sort of natural disaster. My insurance premiums on the house went up 22%.
Wow.
And Lance, when underwriters are underwriting the initial real estate acquisition loan, they historically have done an interest rate shock. They're not doing that in today's environment. So are we saying you better have an insurance shock? Or more importantly, Lance, how many deals have gone south because of insurance premiums?
It happens more so in some states, the states John has indicated, where you've got borrowers who are in a position where their insurance premium might have been $3,000 a month and suddenly it's $4,000. And their cash flow was tight to begin with. So yeah, we're absolutely seeing this. And it also begs the question, John, when we foreclose on a property, they haven't paid the premiums, we have to get coverage on a foreclosed property. It's making it very challenging for SBA and commercial real estate lenders, when they're going through the servicing actions. Coverage is expensive right now.
Lance, is that a unilateral action a lender can take for preservation of collateral, or do we need SBA's approval to force place insurance?
Absolutely not. You don't need SBA's approval. If you have a borrower who is paying as agreed but not paying their insurance premiums, you communicate with the borrower. If the borrower does not respond, then you have the right to force place insurance.
And what if the borrower then lands defaults on the loan because you just forced him to take insurance, or her to take insurance that they can't afford? So yeah. That's the rub, is, there's only so much juice. And if you've got taxes going up, loan payments going up, and now insurance, in not all cases you can make everybody happy.
Hey, John, you have a webinar tomorrow. Tell us about it. Who are the guests? And go ahead.
Yeah, so as you know, we've been doing this series with Coleman since actually about this time last year. And we have essentially 4 groups, a rotating cast, in which yours truly is the moderator. We have 3 different people that join us for each one. This is what I would call our, core banking webinar. We have Chris Marinak, who is the Dean of the Regional Bank Analysts, Jason Kuyama, who is a regulatory and bank eminent attorney for Godfrey & Kahn. Then you have Edward Hita, who's with Secure Isaac, which is one of the lead bank consulting firms. We're going to talk about what's going on in the banking industry, NYCB, the M&A market, potential relief from capital rules that Powell talked about last week. So it should be a great topic for bankers of all titles, but especially for people in the CEO and chairman suite.
That is a free webinar. It is tomorrow at 1 o'clock. By the way, John, it is no longer Eastern Standard Time. It is now Eastern Daylight Time, but that's okay.
That's right.
And we also will have that up on YouTube if you cannot watch that live. John, I've introduced a couple of these webinars. They are fantastic content. You do a great job. You have very talented speakers who offer great insights. And Lance, the important thing on this, I believe, as an SBA lending professional, the more exposure we have to lending in general, and this is not SBA related, but content is great for SBA lenders.
I think absolutely. And of course, a vast majority of your SBA lenders are connected with a participating bank.
Right.
The one topic on this, John, that I'm excited to hear, is the banking crisis over? or my question, John, has it really started yet?
Yeah.
When does it start?
Ooh.
I'm not, what's interesting, I'm not going to name names, but I was looking at a bank recently, and I saw something I've never seen before. Their earnings on their assets were lower than their costs. I've never seen a bank with negative net interest margin. And if you look at the bank, they have almost no delinquencies. It's a very clean loan and securities book, but they're just getting squeezed by the higher interest rates. And my understanding is this bank made a lot of long-term fixed rate on multifamily properties.
Oh.
And, obviously when your assets are fixed and your liabilities keep going up, you don't hedge, you can be in a position where you're losing money. And so that's where we think where the crisis really stands, is now we have a year of the reset of liabilities for banks. And basically the expenses are going up faster than the loan yields are. So banks' margins are getting squeezed and the industry is becoming less profitable. The less profitable banks are, the less they're going to lend, the less credit that's out there.
Yeah.
Very good. Well, I look forward to that. Hey, John, stick around. I want to talk about the funding circle. They were one of the 3 recipients of the new SBLC licenses back in November, and it came out this week. They're going to sell their U.S. operations. They are UK based, and they're going to sell that SBLC license. What's your take on that?
Wait, that's unbelievable. They got the
license. And you know what?
It?
You could stop your comment right there because you're absolutely right. Go ahead, John.
Yeah. Yeah, that's obviously a really bad look for the SBA.
Yes.
Because they were really pushing to expand the universe of SBLCs from, what was it, a dozen to 15?
Yeah.
And, they presumably got far more interest than there were spots. I know many people who applied for this and were not successful.
Oh, yeah. Yes, we are.
So,
yes.
I mean, the fact that
there's a lot of upset people today.
For good reason.
Yeah. And John, what they did is, I'm sorry, Lance, what they did is, I'll let you comment, is they went with Alaska. So Native American, a lot of access to capital up there. They went Arkansas rural, and this was supposed to be fintech. Lance, go ahead.
I was just going to say this, giving the license to a fintech lender, we all knew they were heading that direction, but this was a choice that gives SBA a black eye. The other issue that comes into play, an SBLC license is probably worth $4 to $6 million. Are they going to be able to get this free license and turn around and sell it? Or was there a clause in their contract with SBA that says if you don't participate in the SBA lending program, you can't resell it? That's the big question I have, because they didn't pay for it. They got it free. They had to apply, but it has significant value.
Well, I mean, Lance, I think you answered your own question. I mean, why would they monetize something they can't monetize? Presumably, they looked at the costs of becoming an SBLC lender, hiring BDOs, building up a back office, building up a servicing shop, and realized, wait a second, we can sell this free asset for $5 to $6 million. To me, this seems a lot like the bank term funding facility, which is also resetting this month, in which a lot of banks figured out that they could borrow from this Fed facility and then park the money at the Fed and make 50 basis points. Clearly, that's not what Washington intended, but you can't blame bankers and finance people from looking for ways to make a profit. And, if the SBA allows this to happen, or their agreement allows this to happen, then that was clearly an oversight on their part.
Yeah.
I don't expect either of you to comment on this, but just shake your heads. CEO Lisa, by the way, I like the term whilst. I haven't heard that in a while. I guess it's an English term. SBA lending, quote, requires a significant amount of cash and capital to grow the SBA proposition.
Yeah.
Period. We have received indications of interest for the U.S. business and will update further. Well, yeah, there's a license that they can sell. Obviously, they're in a business plan. I assume, John, that they had a plan for how they were going to fund their growth, but that funding didn't come through, or an investor got cold feet, and they decided to sell. Anyway, John, I agree with you. It's a bad look for SBA. There's a lot of upset people. I would suspect, well, we'll see what happens, but I know there's a lot of, we'll leave it at that, John.
Well, there were such a significant number of applicants for these SBLC licenses.
And
good applicants, and with great plans. I mean,
absolutely.
Yeah.
Guys, absolutely. Of the 12, forget these 3 new ones, but of the 12 legacy SBLC license, are there any SBLC lenders left that are effectively dormant? Are all 12 actively lending, or are there still a couple? Because I remember when I looked at this a few years ago, there were a couple SBLCs that were hardly doing anything.
Most of the answer is, from what I understand, because I looked at this about a year ago, most of the licenses are active. And let me get back to you on that. We're going to cover this further. Yeah. But as promised, Lance, I want to hear it. Bank of Dave review. Go ahead, Lance. Tell us what you think.
Well, guys, Bob's been talking about the Bank of Dave for a little bit, and he put it out to me. He's like, Lance, you got to watch Bank of Dave. And And, as we're all busy SBA professionals, I kind of put it off. And then one night I was sitting, I'd finished work about 7 o'clock, sitting with my wife in front of the TV. We go to Hulu, we go to Netflix, we can't find anything. I'm like, wait a second. Bob told me to watch The Bank of Dave. So we're going to put The Bank of Dave on Netflix. And we're going to let it play for a little bit. And if we love it, we'll watch it. If we get 5 minutes in and we hate it, we'll turn it off. Well, guys, after about 3 or 4 minutes of The Bank of Dave, I was hooked, because this movie is all about SBA lenders. It's a story of a gentleman who was lending money to various small businesses and individuals in the community. He decided he wanted to start a bank, and in that process, the big institution tried to stop him. And how he got out of it, I'm not going to tell you, Bob, but one of my favorite bands played at a soccer stadium.
No, you have to. You have to go. We've given
no,
people
but
enough time.
It was incredible how he raised the capital and met the capital call.
Go ahead.
And so, guys, I'm just going to tell you, if you're a banker, if you're in finance, if you work in the SBA industry, this is a story of somebody that wants to help the little guy. And this is what we all do, lending to small businesses. So The Bank of Dave is worth your time. In fact, I've watched it a second time, guys. It's much like, it's like Napoleon Dynamite with me. And most people won't understand this, but each time you watch Napoleon Dynamite, you get something new and something funnier. The Bank of Dave will energize you and make you happy when you watch it and see how this movie turns out. So again, watch it, guys. I encourage you to watch it. It's a great movie. You're going to get energized, because this guy's trying to do what we do, help the small businesses in his community.
And we will say this, he did get the first license in the UK in 150 years. And we can say 12 years later, he organized it as a nonprofit. They have about 12 employees. And Lance, the movie said he has not had one loan loss.
Yeah, and this is one of the things about his lending philosophy that I love. He knew his borrowers.
Yes.
He knew his borrowers' moms. Character was the big C for him in the lending model. Now, obviously, they collected financial information like we all did, but his lending philosophy centered around character. And like I said, it's a great movie. Once I first started, Bob, I had doubts, but only 3 or 4 minutes in, I'm like, this is a great movie. And like I said, this will be one that I will watch multiple times, guys. So please take a moment and watch it.
Maybe we should do a screening and a listening party, and we could talk about it afterwards.
There you go.
Oh, that'd be great.
Also, so Lance was naming his things that you like. Also, we'll throw in there if you like 80s music, right, Lance?
Yes, absolutely. I don't want to tell you which band helped him raise money.
Well, okay.
But Bob, I would have been there contributing to the Bank of Dave had I know they were going to be in concert in the fundraising effort. So please watch this movie.
Very good. An excellent review, Mr. Sexton. I'm very impressed. You've done your homework. John, I look forward to speaking with you tomorrow. Thank you, everyone, for joining us today for Coleman Report Live and supporting America's Main Street, one entrepreneur at a time.
Have a great Monday.
See you guys.